Today, we're going to cut through all that noise. We're going to break down the 5 main ways people trade, from the super fast adrenaline junkies to the slow and steady planners, so you can figure out where you might fit in.
And that's really the big question, isn't it? Where do you even begin? Ready? Let's dive in. First up, we have scalping. And folks, this is the true high-speed game of the market. I want you to think of this as the Formula One of trading. It is incredibly fast, super intense, and it is absolutely not for the faint of heart. Just look at that time frame, 1 to 5 minutes. With scalping, you're not trying to hit a home run. Nope. The whole idea is to get dozens, maybe even hundreds of tiny little wins by catching the absolute smallest changes in price. But because it's so fast, the risk is through the roof. Every trade has a cost, and those little fees can eat you alive if you're not winning almost constantly. Okay, next on our list is intraday trading. This is probably the style you've heard about the most. We're slowing things down a tiny bit from the pure chaos of scalping, but don't get it twisted, you are still very much in a race against the clock. Intraday trading is exactly what it sounds like. Everything happens within one single trading day. You buy a stock after the market opens, and you absolutely must sell it before the market closes. And this is a hard and fast rule. If you forget, or if you don't close your position in time, your broker will do it for you automatically. It's a bit less crazy than scalping, but it's still high risk and demands your complete attention all day. All right, let's take a deep breath and slow the pace way, way down with swing trading. You know, if intraday is like a 100-meter dash, think of this more like a middle distance run. You're not focused on tiny little price ticks anymore. You're looking for the bigger picture, the overall trend. And this right here is exactly why you'll hear so many people recommend swing trading for beginners. You're giving your trades more time to breathe, days or even weeks. This helps filter out all that stressful minute-by-minute noise. It lets you make calmer, more thought-out decisions, which makes it a much, much more manageable place to start. So here, you're holding onto a stock for a few days, maybe a couple of weeks. The goal is to catch one single, major swing in the price. The trick is being able to figure out which way the market is generally heading. But the best part? It doesn't require you to be glued to your screen 24/7. Okay, time to shift gears into something much more complex. Options trading. You should really consider this the advanced level. It's a totally different animal, and that title, high risk, high return, is there for a very, very good reason. I really want to pause on this quote because it's a direct warning from the experts. Let me just be crystal clear. Options trading involves complex strategies that can lead to incredibly fast and sometimes catastrophic losses if you don't know exactly what you're doing. This is not where you want to start as a beginner. So what even are options? Well, instead of buying a share of a company, you're buying a contract. It's kind of like putting a deposit down on a house. You get the right to buy it later at a set price, but you don't have to. In the market, it boils down to this. If you think a stock is going to go up, you buy something called a call option. If you think it's going down, you buy a put option. It's a really powerful tool, but that's also what makes it so risky if you're not a pro. And finally, let's zoom all the way out to our last category, investing. Now, I want you to notice that we switched words there. We're not saying trading anymore, we're saying investing. And that's because this is a complete change in mindset. We're moving from short-term profits to long-term growth. When you're investing, the time frame stretches out from months to, more often, many, many years. You're not trying to catch little price movements. The goal here is to actually own a piece of a solid company and grow your wealth right alongside it over the long haul. This slow and steady approach makes it the least risky strategy on our list because it's all about building wealth over time. So let's put it all together. This chart pretty much lays out the whole spectrum we just talked about. On one end, you have the lightning-fast, super high-risk world of scalping. And on the complete opposite end, you have the slow, patient, low-risk approach of long-term investing. And everything in between shows you how the time you put in and the risk you take on changes, giving you a really clear map of where you might fit.